Hello everyone, welcome back to Access. In this video, I'll be presenting my long-term and short-term view about Nifty 50. I hope it answers to many questions that are we heading for a major crash or is it just the temporary correction where a trader or investors can find a buying opportunity? Let's quickly get started. If you look at the Nifty in the month of October 2024, it is down by roughly 8% and FIIs have sold over $10 billion. In rupees term, it is roughly around 1 lakh crore. It is a definite indication of intense selling pressure. And if you look at the charts, right from 26,000, the market witnessed 24,180 in a very impulsive note. So it is important to understand that the behavioral change is an indication of a market crash, or is it just the temporary correction? So to answer those questions, I have to look into the greater detail of charts here. So I'll be looking at 20 years charts in order to understand their primary trend, intermediate trend, and then we'll sort it out what we can expect in the near term. And we need to identify the potential support zone that can helpful for any traders or investors to get back to the markets. And then we can indicate when to buy and what is the likely scenario that we expect. I hope this helps a lot of you to understand the market in a greater detail. Let's first look at the 20 years charts here. So what I presented here for you is between 2002 till 2024 October month. And if I actually classify this into impulsive and corrective trend, I can segregate in this way that from 2002 till 2007, the first impulsive bullish move was there. And then from 2007 till 2009, the healthy correction have taken place. And then from 2009 till 2019 till 20, okay, the beginning of 20, and you see the market witnessed about 10-year impulsive, a healthy, consistent bullish move. And then, in line with COVID, a market did crash over 40-50%. That happened in 2020. And then from 2021, that the market recovery was steep enough, and then the market were able to head to 26,000. And if you look at this on a logarithmic scale, the way in which the market rallied on the first wave and the third wave and this current wave are indicating that we are still in the long-term bullish trend. This I can take an inference from Elliott Wave theory, where we have a 5-wave structure. Okay, so this is the first wave and the second corrective wave and the third bullish wave, and then there is a corrective wave, and then it is the healthy bullish wave here. And I'm presenting this on a monthly chart, so do understand that each candle is on the monthly. So now the question is that, Murugan, we started showing a weakness again. Seems to be a big red candle here after so long period. So are we heading for a major crash like 2008-9, or are we heading a crash like a COVID times, like where market corrected? Remember, these are a major crash, I can say, considering the overall primary bullish trend. But it can be other way around, that it can be a temporary short-term corrections as well. So in order to do that, let me look at the intermediate corrections which happened between these impulsive bullish move. If you look at this between 2000 around 2004 and 2006, the market did witness a kind of correction, am I right? And that happened in the first impulsive move. And if you look at the second impulsive bullish move, 2011, and then after 2015, the market did witness the corrective behavior here. And even in the current bullish move, if you look at 2022 till 2023, the market was correcting for quite a good time, and then the market continued its rally. So these corrections are healthy part of any underlying bullish trend to happen. So we can't have a market without having this healthy correction. But the question is now, what are we expecting here? So if you look at, again, I'm referencing the Elliott Wave theory, because we don't use Elliott Wave theory from a very short-term trading perspective, but this is quite a helpful topic if you want to understand from a very long-term perspective about it. So what actually we are expecting here can be one another a corrective wave like this to happen. I mean, kind of an intermediate correction, not necessarily a a major correction to happen starting from here. Of course, a major crash can happen maybe after 2-3 years after it actually elongated. But at current level, what we expect is a kind of a minor correction to happen. I'll justify that using this. So let me take the detail here. Okay, I'm actually taking this particular area, which is the current impulsive bullish move, and I'm gonna zoom this particular area. Okay, so if you look at the zoomed section of this, I've taken now a weekly chart here, and this is a crash happened due to COVID, where a market crashed over about 50%, roughly around 40 to 50%. Am I right? Then I do notice that a market did rally here, okay, impulsive rally, and that is roughly around 100%, and then a market did correct close to 20%, okay, and then it took a kind of a time consolidation to recover. Am I right? It did consolidate well. Then it again resumed this particular bullish move. So undoubtedly, this bullish move and this bullish move are very healthy, and what we can expect here is a kind of a correction to happen. And why am I talking about this correction now? Why not last month? Okay, now try and understand that being a technicalist, we are not someone who can always give a leading indicator, because we need to understand the demand and supply context, and it is very well indicating that the supply pressure is quite intense. So we see a different behavior now. So it is an indication of a correction. So no doubt that market is weak now, but the question is, are we expecting market to go down further or not? Am I right? Yes, we are expecting market to go down a little bit further towards a 22,000, because the market after all corrected just about 8%. It is not the general behavior of this sort of intermediate correction which happens between this impulsive moves here. So we are expecting market to correct a little bit lower. That I can justify using Fibonacci retracement as well. Before I talk about that, I wish to convey something to you. This will be helpful to understand why this is not a major crash at this point, and why are we very bullish from a long-term perspective in Indian markets. In order to justify that, I have to make you understand a concept, that three different types of recovery that one need to understand. Okay, now assume there is a prolonged bullish trend, and then the market witnessed a corrective behavior here. So the first corrective behavior, like what we see now in October 2024, where market witnessed about 7% crash in a short span of time, market witnessing a cut, am I right? And followed by that, a kind of recovery, let's say. And then if a market managed to break the bottom and head a little lower, and then if started climbing all the way, this bullish wave is expected to be healthy, gradual, consistent around 40%. Okay, because the correction has also taken its own time to recover. But look at this one, it is quite different, because after a healthy bullish wave, when it witnessed a sharp cut, and after a rally, it was able to test the bottom but not able to break the bottom comfortably. Rather, it started recovering all the way here. So the difference between the first one and the second one, the second one, is that the first one was able to travel so long below this area. Am I right? Whereas the second one, it couldn't travel much. Rather, it started consolidating and spending some time, and then witnessed a recovery. So it is a healthy correction, and here it is also a healthy correction happen, and it taken by time correction. But look at this one, it is a V-shaped recovery. I'm talking about that after COVID, market witnessed a kind of V-shaped recovery, because after a sharp cut, we didn't see a chance to come back and test that level. Rather, the market straight bounced back, as if like it was kind of by mistake I got into that area. That's very important. So there are three different things. Let me go back to indicate this one. This is like, if you look at this particular behavior, market witnessed first sharp cut, and then it recovered, then market witnessed rally, and then it did consolidate and started recovering. This is more like this behavior. Okay, this is more like this behavior, and that results into a 45%, 45-degree a 45-degree rally to take place. Whereas if you look at this particular V-shaped recovery, okay, that's a V-shaped recovery. That's what precisely happened, because in 2020, when the market witnessed a deep cut, you know even we were expecting market to actually go and retest this level, or probably it takes years to consolidate to recover. But as a surprise, market witnessed a sharp bounce back and actually taken out the top, and then it consistently headed a quite a good rally. Then it was able to have a running correction, we call it, is because the market didn't actually come down, rather it was just correcting. This all shows, okay, it's a tip of iceberg, that what we see here, that it is the strength what the market exhibits, not just for the short term. It is indicating the kind of bullish move that the traders are, the investors are anticipating from Indian markets are quite high. So undoubtedly, from a long term perspective, we are ultimate bullish in Indian market. That's a very good news for any investors to stay invested in Indian markets from a long term perspective. But doesn't mean that this can be taken at so lightly. This has to be seen in a respected way, that it can give some meaningful corrections for a market to go down. Okay, now let me talk about that area. So this is where the COVID period here, okay, that correction, and look at that how healthy and the recovery is. And if you look at the correction, it happened only up to 0.382 Fibonacci retracement, not even 61%. So it just took that the topmost area and then started recovering all the way. And so we had other rally here started. So between this impulsive move, we can expect the correction to, last up to 22,000 here, where the 38.2%, considering that it is a strong bullish move. Or even we can have one more curve can happen, that this is the wave 1, this is the wave 2, and this is the wave 3. So if it is the correction only for a wave 3, then I have to connect this bottom and this top, okay, not this bottom and this top. Am I right? So let me try that as well. So this bottom and this top, there we get the retracement coming around 22,600. So we are expecting the market to bottom out between 22,000 to 22,500. So anywhere between 22,000 to 22,500 is a good opportunity for market to find a support. So we are down by almost 7 to 8%, am I right, in last 1 month? And we can expect, now the market is around 24,000, we expect market to go to 22,000. It means we are expecting market to go down by another 10%, let's say, for a market to find a support. So from a very short term trader's perspective, we expect the bearish move to continue until it finds a support around 22,000 to bounce back. I hope I've given a lot of clarity, and if you want to have a view more about it, I do review it again, that you get some check on it. Okay, now to summarize the whole presentation of mine, that are we expecting any major crash? No, we are not expecting any major crash. But yes, we are in the middle of correction. We are not even get over with the correction. We expect the correction to continue for a while. So the market is right now around 24,000 odd, but we are expecting market to go towards 22,000, 22,500. That is where that likely support is expected. And we are looking at long-term bullish trend. And for any investors, that the long-term bullish trend is expected to continue. So I hope you guys got a meaningful understanding about Nifty by looking at this presentation. Do remember one thing, that there are a lot of fundamentally good stocks are available at a fair valuation, but doesn't mean it is a cheap valuation. It is not that the market is already crashed for you to break your FDs to get into equities. I'm not telling you that scenario has happened, but of course, if you look at an example like HUL in last 1 month, it did correct close to 20%. Am I right? And it is back to that same valuation where last 3 years it is into that area. So does it mean that we have to go and buy from a long-term perspective? I'm using the term long-term means 10 to 15 years. For that, we need to review the fundamentals of it. And HUL is really fundamental stock, but the valuation is still a fair or slightly above overvaluation, but not got into a cheap prices. But we do have some stocks are attractive for investors to consider or to buy into it. And surprisingly, we have different industries to present as well. So if you guys want to have views about long-term fundamentals along to take an opportunity with this correction, do let us know in the comment section. We will be talking about it. And with respect to Elliott Wave theory, that we are not teaching Elliott Wave theory for our students, or we are not using Elliott Wave theory in our day-to-day intraday recommendations or option strategies, because those things are practically useful only from a long-term, primary cyclical understanding, not from a short-term perspective. I hope you understand in what context we used Elliott Wave theory here. And thanks for staying tuned until this minute. I hope this helps you in positioning your trades as well. Take this as just an information, understand it only from an educational perspective. Do spend some time in understanding it in detail, and if it is useful, take it forward. Thank you. All the best.